What is going on, traders? Welcome back to the Traveling Trader. Thank you guys so much for all of your well wishes. For those that were concerned, I will have you know that I tested negative. That's neither here nor there. Let us get into the topic of the day. So Papa Jay Powell and the Fed just did something that might have slipped under most people's noses. I want to talk about this in this video because I do think it's important to the conversation surrounding inflation and then obviously the macroeconomic effects that this could have, as well as the effects that it might have on stocks. This specific hidden policy that I'm talking about definitely gives us a clue that they will likely raise rates much sooner than expected, sometime next year. At first, they said 2023, but I do think it will happen by middle of next year, and they will definitely start tapering by the end of this year, unless something drastic happens with COVID or whatever. So we'll definitely get into that, and then I will give you highlights of the Fed meeting so that you don't have to read any boring online articles or watch any boring videos by people who have no clue what they're talking about. And as always, I'll give you an update on some of our current plays. We did buy the puts on the VIX, expecting the policy to remain largely unchanged. Took 40% profit on those VIX puts today, but let's get right into it. All right, so the policy that slipped everybody's radar, and you won't hear this on most of the major finance news channels, has to do with the repo market. Now, you know that I like to keep things simple for you guys here, and I like to simplify some of these complex concepts so that everybody is aware of this stuff and not just the few. So the repo market, which is short for repurchase, is a way in which the Fed either provides liquidity to the economy and the markets or removes liquidity from the economy and the markets. So in this case, because there is so much excess liquidity, what a reverse repurchase agreement does here is the Fed basically offers an instrument or a facility to the banks and says, hey, give us your money. Let us take liquidity out of the market. We'll give you X security, and then we'll buy it back from you for a higher price later. So that incentivizes the banks to pour money into this reverse repurchase agreement, as opposed to using that money to lend it out at cheap rates to consumers like you and me or businesses. So what the Fed essentially did was it raised that cap. It essentially doubled that cap from 80 billion a day to 160 billion a day, meaning that they are willing to suck more of the money out of the market, out of the financial institutions, because there is too much damn liquidity. What this also does is it artificially puts a floor on short-term interest rates. Because if interest rates get too low and there's excess liquidity, then that pushes inflation even higher. And the Fed is terrified of inflation because they keep telling us that inflation is transitory. Now, in all fairness, we are seeing the prices of commodities drop, but they want to keep it that way. So what this tells me is that the Fed is actually more terrified of inflation than they are letting on, which means that I think we will see an interest rate hike sooner than expected, sometime by mid-2022 in my estimation, and we will for sure see tapering by the end of the year. I use the words for sure here lightly. I'm not Nostradamus, but you could see here that in TLT, for instance, which tracks the 20-year Treasury bond, so not really a short-term interest rate instrument. However, you do see TLT pop. We actually had calls on TLT as well, expecting a breakout here. As you can see here, on September 14th, we bought the 156 call on TLT. And by the way, if you want access to all of our trades, link is in the description below. We talk about hedges, policy, long-term, short-term trades, investments, options, crypto. We do it all. In my view, it is the best trading group on YouTube. Over 4,000 traders. Link is in the description. Would love to have you. All right, let's get back into it. So now that you know about the repo market, you know that the Fed is now actually more concerned about inflation that they are letting on. What else happened from Jerome Powell's speech today? What were the main highlights? One, they're going to leave rates unchanged until at least next year. Two, we already knew this. They are going to likely look at tapering by the end of the year. Again, tapering just means that they will slow down their asset purchase. Currently, they're purchasing about $120 billion in assets a month. Three, they don't see the Evergrande situation in China spilling over to the US, and this has been my position as well. Yes, it's a terrible situation for the company, for the employees, for those that actually bought homes from Evergrande, but in terms of its impact on the global economy, China actually keeps its economic endeavors and its business endeavors insulated from the rest of the world. And there isn't much US exposure to Evergrande. There is some, but not a ton to cause a ripple effect that would bring down the markets. 4, the economy is improving. 5, a decent jobs report in November will likely be the catalyst to start tapering. And number 6, which I think is actually important, is that corporate loan defaults are very low in the US. So because of that, you see markets rallying today. The Dow up a full percent, S&P almost up 1%, NASDAQ almost up 1%. These are nice bounces. Is this the bottom? No, I don't think that any one experience would declare a bottom here. However, as I said from my last video, my very last video, if the Fed comes in and saves the day, then the market rally will continue and we will not even see a correction. Now, this is the definition of saving the day. And because of this, I could see the markets continue up further. Now, again, I'm not an idiot. I'm not going to say that this is for sure the bottom. There could still be some selling off because as I mentioned in my last video, the market is trading at insane multiples right now, but there is nowhere to put your money. Think of that. If you have money, there is nowhere to put it, which is why the markets are going insane as they are. So in my view, when you see the S&P 500 at the 100-day moving average, you're supposed to buy it. If you see blue chip value stocks here like Caterpillar at the 300-day moving average, I think you owe yourself to at least start dollar cost averaging. BA, Boeing is also at the 300-day moving average. AMD's back at the 50-day moving average, also creating this bullish pennant here. Now, I'm not saying this is a ticket to go crazy, but this is when you want to start dollar cost averaging. Everyone wants to buy in at the all-time highs. But when there's fear and uncertainty, that's when I usually start going into blue chips. I sent out a full list, a full report from today, all of the stocks that are worth buying. Again, if you want access to all of our trades, link is in the description below. Hopefully you got something out of this video. You understand, at least at a high level, what the reverse repo market is. And you also got the highlights from what the Fed announced. If you did, leave it a big fat thumbs up. Leave it in the comment section below. Let me know what you think of the Fed's unchanged policy and what you think of the reverse repo market if you have an opinion. Also, let me know what stocks you bought on the dip. I love to hear from you guys. I try to respond to each and every comment. That is not a bot, obviously. Subscribe to the channel, hit that notification bell. Stay safe out there, traders. Peace.